A day of fluctuating fortunes, or I would say reversal of fortunes. After a slow start, we've closed at the highest point of the day, but still 10 points shy from that mark of 6,600 on the Nifty.
Yep, record highs once again on the Nifty, but where are we headed from these levels? Would be good to bring on board then our experts. Joining in on the show, we've got Ravi Muthukrishnan, co-head research at ICI Securities, and Sandeep Wagle, founder and managing director at Aptar Technical Advisory Services. Let's then get in views then on the technical charts from Sandeep, and wanted to know what exactly you make of, the momentum that we're seeing in the markets as of now, because I mean it's clearly we're going on to hit record highs, and with the kind of news that we just seem to be ignoring on the fundamental side, are we poised to go even higher prior to the elections?
Good evening, Avan. I have been talking of a 6750 target, and I think we are in course for that. Now, whether it happens in the next 2 or 3 days before the expiry, it doesn't happen, it happens in the month of April. I would not want to get into that debate. That can't be predicted, but I think certainly 6750 is very much on the cards. And I think we are making a pattern which is nowhere suggesting weakness. Every dip or a correction is being bought into. Yes, there are some stocks which are weak, there are some sectors which are correcting, but some others are taking the place. And I really don't see our markets fall. And if you talk of the Nifty specifically, I think 6500, 6480 has become a kind of a base, and I think it should not be broken down before 6750 is tested. So I would bet I would bet on the 6750 before a 6500 is broken.
Sandeep Sabharwal, for the moment it is clear blue skies, a lot of sunshine. Markets are moving up. Some would argue because of hope. Others would argue it's because of assumption that macros are in place. But at this juncture, do you think markets are priced to perfection and there is some degree of complacency which has kicked in?
So I think, Nikunj, when I actually look at the comments of people which come through, and a lot of chat forums which I actually monitor on Reuters, Bloomberg, etc. I think
you should do some on ET Now as well. You have a lot of chat forums.
So people are actually looking for a top rather than a bottom, even now. So I think everyone seems to be looking for a top. The second factor is that yesterday there was an institutional investor poll. None of the investors said that the market will actually be above 7,500 year end, and my target is actually above that. So I think people are still wary, and the kind of institutional flows from FIs which you are seeing, these are clearly not momentum. This is clearly not momentum money. This is long-term money which is coming in for a reason, and the reason is that macroeconomically India is much better off than most other competing emerging economies. And in all probability, we'll see a government at the center in May, which is the most stable over the last 20 years. And I think those are the factors which are real factors, which will drive the markets for the rest of the year. Now, where the markets will end in the near term is difficult to say. But I think, like your last guest was saying, 6750 to 7000 prior to election seems to be the likely scenario. And the subsequent immediate moves will depend on the election results.
Let's see if three of our guests agreed with that synopsis. Ravi, how would you be reading into the markets and the current environment after we've seen this massive rally? Do you think that the risk-reward ratio to buy into the Indian markets, that's still favorable for individual stocks?
Since last July, we've been observing day after day, the opinion polls have been suggesting a stable government at the center. And added to that, we have other pieces of information which points to that fact that there could be a stable government. All of this have added to the rally, and we expect this rally to continue for some more time till the elections are due. So anything in the range of 6,900 is what we expect. So that is based on the earnings number which we have for FY15, which is about 485 as against 491, which is the consensus. Now, beyond the elections, what can happen depends on whether the expectations have fructified. If you have a stable government at the center with substantial number of seats coming for the major party in the coalition, you would expect the markets to sustain those levels for another 3 months. But once the realization starts, or once things actually come into play, or the truism of what is going to happen comes into play, I think the markets will then start reacting.
Sandeep Sabharwal, there you go. 3 experts, and there is a consensus that markets are headed higher.
Yeah, but I think the consensus is for the near term. I think going forward, I think longer term, a lot of people are much more wary. And I think that's the state of the market today. People are able to pick out a level, and people are saying maybe this could be the top or that could be the top. Whereas when the economy is going to turn around and when governance is going to improve, I think we shouldn't be looking at a top. We should actually be looking at where the markets could correct to and where one should be buying into.
Isn't that hope?
I don't think so. I think hope rally was there in 2012, and 2013 we saw a lot of the hope come off because a lot of expectations got built up which didn't get fructified ultimately. But I think now the scenario is much better off as far as India is concerned, at least.
There are some stocks which are typically called as late cyclicals, and every time when these stocks they start moving up, that really is the first harbinger that the party is about to end, at least for the moment. If there is one weak group in the market, that weakest group is in the entire CV group. Now, Leyland is a CV manufacturer. Shriram Transport is a company which is financing CV vehicles. So when really the end of the rung or really B group stocks they start moving up, or at least weak businesses they start moving up, it's time to really understand that where is the fundamental push in this market rally, and that is something you need to be really be wary of. And Sandeep Sabharwal, this is really the issue, isn't it?
Nikunj, actually I took a lot of time to get through this fact that what explains the movement of stocks at a time when immediate fundamentals don't seem to be improving. However, we can see the fundamental improving sometime down the line. So typically the markets will not give you opportunity to buy stocks cheap. So when everyone thinks that this is not the time to buy these stocks, some long-term players will come in and buy them as value plays. And by the time you actually start thinking that this might be the time to buy these stocks, they would already have moved. And this is a phenomena which we have seen in a lot of sectors which did well over the last 2 years, especially pharma, IT. Where the stocks never looked cheap, but the stocks kept on going up. And I think that's something which you could observe going forward as the cycle also plays out. So you're right, when there's too much speculative activity which gets built up and there's too much action especially on the F&O side, then one should be wary of the markets. But even on F&O, I don't really see a huge amount of position built up in specific stock futures. And that's where one gets wary. That's when one gets wary when that starts happening.
Ravi, let's talk about the oil and gas basket. That really merits a mention given the kind of move that we saw today. How would you be approaching it, especially in light of the Election Commission decision? Reliance Industries, ONGC, Oil India, yes, they did recover from the day's low, but would they fit into your portfolio for the long term?
By and large, if you see the diesel price deregulation has been a big positive. The oil price is coming down, rupee appreciation, all of that, plus the fact that in vote of account, the government of India said that the entire subsidy amount will be paid back to the OMCs. So as a consequence, we are slightly upbeat about the OMC space, especially BPCL in that space, though it's run up enough. But when you come to the gas space, yesterday, of course, the gas price announcement being deferred, there's a big setback for ONGC and Oil India. But we're still positive about Reliance for the simple fact that most of the investments in the refining and petrochemical space has not been well captured by the market. In fact, we expect another 30 to 35% upside on that stock moving forward. Though, of course, the gas price announcement is a slight setback for that stock.
Sandeep Agle, the big game in the town today was PSU. For those who are buying into PSU stocks or for those who have bought into PSU stocks are either happy investors or happy traders. In general, what do you think is the trend for PSU as a group?
Well, it is certainly positive. I have been recommending a BPCL since 430 levels, and I really don't think that BPCL will see levels below 400. Very, very clear patterns. And one thing I must say though, that these stocks may not give you the appreciation in a hurry. So they are more for investors or position traders rather than a week or a 10-day type trader. It may not work out if you are in that mindset. And you do well if you take a 3 to 6 to 8 months or 12 months time horizon. If you are looking at PSUs with that angle, then I think it will work better for you.
Ravi, let's talk about the capital goods space, and given that the reform push is certainly going to benefit the sector, where does your preference lie here?
In the cap goods space, of course, the best bet for us will always be L&T though. And the reason why we talk about L&T is because it is the best company, a well-placed company, should the economic revival which everybody has been talking about actually happens. Though, of course, we do realize that investment cycle to pick up is not going to be that quick. But it's not a short-term story, it's a long-term story though. Maybe 6 months to 9 months, the stock should do well, should the revival happen.
Let's find out what the dealing rooms are advising. Poonam's here with the stocks. Poonam.
Well, Aman, what we hear from the dealers is that buy on Kirloskar Brothers, as some of the Singapore-based funds are buying into this stock. This company manufactures agri implements, tools, power-driven pumps, as well as plows and turbines, as well as the volumes in this stock is generally low, and the stock is trading above all TMA. It's just up nearly 5% on a YTD basis. So watch out for this stock as some of the funds are nibbling into the stock. The other stock is, of course, Krishna Industries. The stock is trading at cheap valuations, and it's into the specialty tire manufacturing business. Analysts do state that the company has made the management rather has taken a lot of efforts to improve the volumes for the tires, as well as they have taken initiatives such as increasing the sales to the OEM markets, enter new markets. Also, the demand across the new markets and segments has been improving, and the cost of production is low as the rubber prices still remain low. So there are upside risks to the stock price if at all the rubber prices do remain at the current levels. So a buy on this stock as well. The stock is already up close to around 20% in the last 3 weeks.
Ravi, cement is one space where as a house ICICI Securities is extremely bullish on. So after the recent run-up in across the board cement stocks, starting from ACC to regional players like Ultra, regional players like Shree Cement, what do you like within the cement space?
See, again, for us it's somewhat to do with the election theme itself. We expect the stable government would mean that there would be a greater demand, better utilizations, better margins, and better revenue growth and earnings growth. And coincidentally, what you see here is that the pre-election period also coincides with the uptick in that sector. The sector usually does well during this period. And so what we feel is that companies which have capacities in place to take advantage of the rising demand will be the ones which should do well. For us, Ultratech is a good company to look at in the large cap space, and Shree Cement is a company in the mid cap space.
Sandeep Wagle, your top bets based on the chart readings.
I want to buy in a Dish TV, stop loss of 49, target of 59. I buy in a BHEL, stop loss of 191, target of 206.
Sandeep, last time when we interacted with you on this forum, and that question is for Sandeep Sabharwal so that there is no confusion, you said you were bullish on Maruti. Now that there is enough and more clarity on the Gujarat plant, do you think Maruti should be a must buy in the portfolio?
Yeah, Nikunj, I think that's what we discussed at that time. The previous history of such events suggests that when the event is so far off, normally the near term takes precedence, and near term outlook for Maruti actually looked quite bullish given the excise duty cuts that had happened at that time, and the fact that consumer loan rates are coming down. And I think Maruti will be the first beneficiary of the revival in consumer sentiments. So my guess is that yes, if you ask me whether it should be part of any long term portfolio, it should be. And when we talk of generally what could take the market still higher from here going forward, I think two stocks come to my mind. First is L&T, where we've seen a series of upgrades in the near term from a lot of FI brokerages. And second is State Bank of India, which I think still has not moved too much and remains quite undervalued.
Speaking of the banking space, Ravi, what is your investment theme when it comes to the sector? Is it only private banks, or are you even venturing into PSUs?
By and large, because of all the positivities around the stable government and improving fundamentals, we think the credit quality would improve. We think the liquidity should improve. Interest rates should soften, if not now, at least in the near future. And as a consequence, we are positive on banks, especially the private banks, and of course one or two PSU banks. The name which we recommend in the PSU space is PNB. But as regards the private banks, we are optimistic about Yes Bank and Axis Bank. The reason for Axis Bank is that they have a sizable exposure to the infra space, and once a revival starts, I think they should actually do well.
All right, gentlemen, thanks so much for taking time out and joining in with your views on the markets as well as your sectoral and top stock bets.